Hey guys, John here, Mr. Forexfire. So now Christmas and New Year is certainly out the way with now, and the kids are back at school. My oldest has just gone back today. My youngest was yesterday. Don't know why there was 2 different days, but hey ho. Well, let's take a look this morning at the 1 minute scalp. Okay, so I'll do a short session on the 1 minute scalp, but because there's a lot of new people that's just come into the Discord as well, what I'm going to do is I'm going to start from the very beginning and sort of give you that in-depth step-by-step guide, what we sort of look at and how we move forward with it. Simply because over time, what had happened with my trading journey was I was always a long-term trader, a higher time frame and long-term trader. And over the years, becoming consistent, and other things, I've now been able to get to do this from home. Now, when I've been able to do that from home, I found that I was starting to be at the charts a little bit more. So then that's when I started falling into the scalping side and thought, is there a way I can do best of both worlds? And that being, can you actually use the higher time frame, the lower time frames, keep yourself in the game with regards to certain goalposts, so you're not over trading, not being greedy. And that's when I've sort of merged smart money with order blocks and a scalping method. Okay, but not only that, I was able to sort of condense it into a system where, based upon the time that you put into it, you would possibly only get maybe 2 or no more than 3 trades within that trading session, which for me, if you look back on my YouTube channel, I did many sessions on the EURUSD 1 minute fire scalper, and I started from 0 and I grew an account live in front of your face up to around about 40% growth in around about 5 to 5.5 weeks. Now, I know as well, Peter, who's inside of our Discord group, he was doing this on the US 30. He was seeing phenomenal results as well. On top of that, we started putting in something called asymmetrical compounding, which is something I'll go over in time as well. Okay, so first of all, I'm just going to head to the screen. It's enough of me waffling on. And I'm going to stick with the Euro USD. Okay, and the preference of this is we look at where we are from a higher time frame and work ourselves down. Okay, just to do a little bit of bias analysis, and we can see we have been certainly in a range. Okay, from November of last year, we've been stuck in a range of around 150 odd pips, which isn't a bad thing, to be fair, because we are only scalping. Okay, we are only really scalping the market. So what I would possibly do is I would sort of hit that high there, and certainly hit the low here. Okay, so that's within the 1 hour range. And again, when we're scalping, we're not going to see that much of a move in the market, in all honesty, in the sort of parameters that we do. So let's just go down to certainly a 1 hour. Let's go down to the 1 hour. And again, there's not going to be much change, to be fair. 30 minutes. I just want to mark a few things just as I'm going down to 15 minutes. And then 5 minutes. So we've had, obviously we're in a downtrend. Another 15-minute, we've come down, we've come up to sort of retest from the high, the lower high, the lower low, lower high, lower low. We've come back to retest that lower high, okay, and the order block. And the order block is, like I say, is the last sell before that, is the last buy before the sell on this occasion. That there has been tested, now it's moving down. What we would possibly be looking for now is obviously that there to come down and take out the liquidity on that side, okay? So I mean, again, we're just looking at things at the moment. We'll drill down to a 5-minute. And then we'll finally go down to 1 minute, okay? All right, so we have sort of predetermined, we're certainly in a downtrend, okay? We've been in a downtrend, I should say, but we have now hit consolidation fears. The consolidation fears isn't going to make much difference on this, because within that fears, personally, it is 150 odd pip move. So what I'm looking at the moment is, in all honesty, is because we've been down in here, we just need to mark off the high and the low sort of area. So I'm just gonna do a horizontal there. I've got that area there, and I've got that area there as a range. Let's have a look at the pips. So that's a bit better. We've got around about 24 pip range that we're working from in there. But again, most importantly, we need to set our goalposts, right? So just stop the share a minute, I'll explain this in a moment. Share. Go back on. I think I'm recording still. So yeah, where we go from, after having a look at a little bit of analysis, again, we start at the 1 hour. We can see on the 1 hour, even going all the way back, we can see it's in a consolidated sideways range. We measured the pips on that, it's 150 odd. That's not going to be detrimental to what we're doing in here for the time sort of area that we're going to be working in. From there, we've gone down a couple of time frames, seeing that there is a bit of a downtrend within that consolidated phase, okay? So what this is all about is setting your goalposts. Now, this is the important bit. We set ourselves a 2 hour area, okay? And that 2 hour area is what we are allowing the charts to have our time, okay? You're not going to be doing it any earlier, and you're not going to be doing it any later. And if anything, once you're happy with, if you've grabbed a few profits or a couple of % of profit, you don't always have to trade the full 2 hours, okay? So we're going to work this from the 9 o'clock. So we're going from the 9 o'clock is going to be the start, which is there. And we'll have this set up to the 11 o'clock finish. So this right here is going to be our trading window, okay? The London Open. Now, what we are looking for, okay, what we are looking for is a break of structure from a swing point, okay? From a swing point like that. Once we get a break of structure from the swing point, we then look at the order block, okay? Again, I would possibly be happy with using that there as a returned area where liquidity is, to be fair, okay? So we've got liquidity residing there at the moment, and as you can see, we're starting to push through here, okay? So again, because we're not in our trading window at the moment, let's do a little bit of a further analysis. And now this is the other thing that we were doing just before the end of last year. It's marking out a path. You can sort of mark out a higher time frame path within your sort of chart on this. And the way you would do that is go on the instrumental panel, click on the geometrical shapes, click on the path, and then you're going to do the high to a low, and it doesn't have to be every swing point, okay? It's just the prominent ones, the ones that hold significance from what you're seeing on here, okay? We just do that, and I'll show you why we do this in a moment. You're basically looking for points of where it holds its structure, if that makes sense, or breaks a structure, okay? So we do that, do that, do that, and do that, okay? Now, the reason we do that, you'll see in between here, we've got what we call an intermediary price, okay? So if we were to go up to, let's say, a 1 hour time frame, scroll out, you will see price is basically holding the line of there. We go to the half hour, might be a little bit better. Again, there you've got your high to your low, high, low, equal high, low, and then you can see it bouncing. And this technique is really good. It works really well. So we go down to the 15 minutes. We can now see things like of an order block nature within the 15 minutes, okay? Again, you said it's coming in to retest that area, okay? And again, from that standpoint, you would normally get 50% retracement of any sort of pullback, okay? So I'm just going to put that to the IP here. See on here, we've got the 50%. It's come down, it's touching him beautifully on there, and then it's starting to respect, it's bouncing up off this order block here. So there's loads of different ways we can look at this. Also, when you look at that there, as we've come down, as this is a downtrend, okay, as this is a downtrend, this is a pullback before it's finally touched underneath, taking the liquidity of this final candle. So this is an order block area here. That order block, when we stretch it out from wick to wick, it holds 50% here. This is broke out of the downtrend, so to speak, and it's coming back down to test on the 50% of that order block. And these are just daft little sort of techniques that I use to help me structurally look deeper into the field of play, if that makes sense. So that's why I have these as a higher time frame structured path, okay? So when I'm on my 1 minute chart, I can see that if price is going to come back into these pullback areas, okay, I know it's generally going to go to around about 50% of that area. And again, if we go down to 5 minutes, you're going to see structurally, okay, that we generally have this mapped out pretty well. And again, intermediary price is within the area of these higher time frame structure moves, okay? And again, that's on there. I mean, that's more or less beautifully playing out there. You see on there, we've got liquidity here, okay? See where the liquidity is? Yes, it's broke through the liquidity now, but if you do that, look where the 50% line is. 50% is more or less on the liquidity, okay? There was liquidity residing here before we even got onto this candle, what pushed down underneath, okay? Watch where, when we break the liquidity area, okay? Watch when we break the liquidity of this candle and this here. Look what it touches into, okay? Watch. So it's respected there, and then bang, it's come bang into 50% of this area, and also it's taken the liquidity. So there's one of a couple of options is going to happen here right now, because it's done that. It's either going to smash through this, do this, and then take the liquidity on the lower side, or it's going to react off that area. It's taking out the stops. It's going to take out the stops on there, and then it's going to continue up, and it's going to flash through here, okay? So what I want to do is, that's the bias at the moment on the two things, okay? So we are now entering 9 o'clock. What I'll do is I'll pause the video, and again, these are always live recorded There's nothing edited. Again, you can't edit anything on a live chart. We'll come back shortly and we'll see where we are from a field of play. Okay, so we've got liquidity on the buy side, liquidity on the sell side. I just want to see what's going to happen when we break structure down a bit more. Let's go down to a 1 minute chart, because that's what we're trading from. Okay, let's just make this a little bigger, because when you watch the recording back, the candles don't look as big. Right, so we've got this here. Let's get rid of that there, get rid of some of the noise. So we're waiting for a push down, retest, and then break of the sell side liquidity, or we are simply waiting for the push and the drive up. One thing we could have set now as a trade, to be fair, because we have taken the liquidity on there. We're not doing any fibs or anything else. Okay, we are just simply doing a return back to an order block area. Okay, and then you would simply just go right where we broke structure here. There could be a potential for a trade on the higher side, and if this was to hold structure, okay, the swing point here, if this was to hold structure, we would come back down and target that area there. So there's a 1 to 5 on a potential at the moment on here. We'll leave this trade on here. Again, I would reassess if we do get the push flashing down through here. Okay, so I'm just going to put my fire wand on here for now. That's my fire wand, the stick. So we're going to pause it for now. We do have a trade, like I say, not active, but we have our general bias ready. We've got everything saying, yeah, we were in a consolidate on the higher time frame on the 1 hour down to 15 and the half hour and the 15. Again, as we drill it down to 5, there's around about a 20 odd pip movement. We are waiting for the current break of structure. Everything lies towards price coming down below this area here, in all fairness, because within that consolidated range, again, if we go up, just take a look, we are in a downtrend, because when you look at it, we've got a high, lower high, again, lower high. We did come up the retest above here. Again, we would be looking, if it was going to be on a continuation down, to be fair, you're possibly going to be looking for, there's a 1 hour order block here. Okay, there's a 1 hour order block right there. Go back down to a minute. There's every chance that price could break through here, and as it breaks through, okay, it might come into this order block here and retest from the 50% on there, and then make its move back up, just on the basis of, obviously, we've got to break a structure, this might just simply react off here and then push up, and it might enter into here. But we'll have to wait and see. I'll pause the video, we'll come back, and then we'll continue with the analysis and the bias and things like that. We've got a couple of directions and POIs that we're going to be working from. Again, doing these and working your 2 hour time slot like this, it helps you identify structure points and things like that. And as we move in, and if we do get an entry, I'm going to show you as well how you can work with the order of play and start marking up your imbalance areas, and just watch how the 1 minute respects into these areas as well. A lot of people think the 1 minute's fast and furious. It can be, and it cannot be. I've had times where I've sat for my 2 hours of trading and done what I do, like I'm doing here now, and I'm getting nothing from it from a trade aspect. And you would think that you would get lots and lots of scalping trades, not on the way that I do the fire scalper. Okay, the fire scalper is always based upon previous order blocks or break of structure. So it's the smart money aspect, but it's also respecting structure and respecting structure, and it's respecting the price action. Okay, whereas most people would use, in a scalping session, most people would sort of use moving averages, oscillators, other indicators. I'm doing a scalp based upon pure price action with no indicators, and it has worked, and it does work. I've proved that this works. So we'll pause the video, we'll come back in a minute once prices start to move in other ways. If we get a break of structure on certain other areas, we'll come back, revisit, analyze, and take another look, and then see if we can get in on a trade. At the moment, I'm going to be holding this one here at the moment. Okay, so I'll pause the video, we'll be back in a moment. Hi guys, so as you can see, we did get that test. Like I said, it's took out the liquidity and it's bounced off the 50% of what would have been an order block on the higher time frame, because that's the one swing. Okay, intermediary price, it's bounced off that area, and now we're starting to come up, and we're hoping that this area here, okay, we'll get the fire one out again. Now we're hoping that this area here will sort of hold structure, and we might get a play from the order block. Okay, so what I would possibly do is widen the area here and make this possibly a 1 to 3.62 or so. We'll see if this holds out again. I'm not live trading this. I'm just showing you the possibilities and the technique on what can be done if you are more of a scalper. Okay, using this method and using this way is a controlled way for a number of reasons. Okay, one, it stops you from over trading. Okay, two, it stops the greed. If a structure fails, it's going to fail. You just wait and move to the next. Okay, number three is you've got your time. Okay, your 2-hour goalposts. Okay, from there, once your time is either caught maybe 1 or 2 trades, because with this being a refined sort of entry of scalping, all you really need to do is grab that one trade. Okay, if you're happy with a couple of percent, on this instance of 3%, if you were happy to grab that and you ended up getting that on a 0.25 risk to reward, okay, you're possibly going to get around 1% or so. If you were happy with that, just close your trading out for the day. That's what this is all about after all. You don't need to go on the charts and start to just look for price that isn't there. Okay, you don't need to do that. Again, will this enter the trade? It may not. We may find that price, we are within a range at the moment from the liquidity. Okay, so if we put this to here, we'll get rid of this now. Let's just keep everything marked up at the moment. Okay, so we've got liquidity is residing here, and we've got liquidity at the moment is residing on the top side. Okay, now that is the structure. The structure we are working from at the moment is basically that there. The movement of pips within that structure that we are working from is only a 20 pip move. Okay, now this, if it was to enter, it's around about a 5 pip stop loss. It's around about 17 pips. And if we were to drill it down even more, as we are looking for sort of areas of maybe taking partials and things like that, okay, what we've got is from the wick here, okay, you can start marking out your areas of imbalance. Okay, so this is an imbalance area. Let's just have things marked out. Again, we've got imbalance in here. Let's get rid of the fire one for now. And you'll see as we do the run of play on this, okay, you'll see as we do these things that, there we are, you'll see that price will as it fluctuates, it will generally come down to respect into 50% of these areas. Now, the more you do these, the more you do this, and the more you practice drawing on your charts for things like this, it's going to open your eyes to bigger things on the charts and things like that. But this here gives you a really sort of hawk-eye sort of aspect on what you're looking at in your trading. Again, let's see we'll get the touch into entry before I pause the video. But if we do get this whole structure, if we do get this to hold structure, we'll possibly find our TP areas will hold on here, and we'll get some sort of respecting. Or if the euro has become strong, okay, and the USD is weak, we might get a massive continuation and push on the upside, and we might break the structure on this, simply because if you look at this, it's just been one amount of buying power. Okay, see on this, we go up to the 5 minute, go up to 15 minutes. This looks as if this might just engulf the whole of this high here. Okay, we'll see if it'll hold structure. We'll see if it'll keep us in play, and more importantly, if it does start to come down on the downturn, let's see if these areas of imbalance get respected with a bounce off. Okay, so again, you could see the first structure play that there, if we move that to there, there's nearly a 1-to-1 risk to reward ratio. Okay, but we are heading towards that there. I would possibly have that to, let's just get this, a possible, if you could do, take a partial move, say close your partial 50% and then move to your BE area. So you're moving your stop loss to the break even area, and you can see, look at that again, doing this right in front of your eyes. Yes, this is recorded, but you can't edit recorded. You can't edit recorded footage on the charts. This bounced off that area that we were looking at. It's going to come down. It's possibly going to go down to, again, the 1-to-1 ratio. That is the R1-to-1 area. That was a 1-to-1 area there. The next one would have been a 1-to-1.5. Let's have a look at this. 1-to-1.5. That's a structure point there. And let's just see if it plays out to sort of come to this area. I'll keep recording for now because obviously it's coming back down on its downturn. We might get a rejection wick or a rejection candle off this 50%. I'm hoping we don't. I'm hoping we don't, because if we do, there's every chance that this might push higher up, breaking this. And if it did reject off this, okay, and then it broke that structure there, I think there's a chance that this could then move up to the SL area. And you can see again, look, don't make this stuff up, guys. We're coming down. We've more or less wicked into that 50% area. Let's just see if it holds. Because again, every candle in itself holds a liquidity area, okay? And that would hold liquidity in itself. Let's just mark this down. Just want the buys to come back into control a bit. The sellers. So as soon as we're getting a touch into here, we would move this to a break-even area, because we will have closed out half of the trade. Let's take a look. We'll pause the video. We'll be back in a moment. and then in fact, no, wait there, we're getting the push now. We're getting the push. Are we going to get the break of liquidity on this higher side? Again, you've got an imbalance down on this area here as well to there. There's 3 parts of imbalance where it would need to come to mitigate at some stage. Okay. And again, let's just mark out the 50% on that. That in itself there's just a 1 to 2.2. 2.19 it was. And again, I love doing these just to mark them out and see where we are. We can now see prices coming up. It looks like it's going to take the liquidity from this area. It's wick just above that. And the bias of what I was saying, we were going to get a rejection off here, and then price, if it does push past this, we would then possibly get a move. In my opinion, we would possibly get a test down on here to then push above. That's what I think is going to happen now. Well, let's just see what happens, or if we actually get a crash down into these lower areas. It's just getting used to your surroundings more than anything, to be fair. Let's just see if we do get a rejection of this area. Might prove me wrong. It might be giving us a double top, to be fair, but this has just taken the liquidity there. It has just wicked slightly through it. I've got a feeling that we are going to get the bounce off this area here to then move up to take us past. Hopefully it's going to sort of prove me wrong, and we may get an engulfing move down through 2 of these. That's what I hope. But again, are we going to get the bounce test to then move further up? Right, let's have a look. So there's the touch. We've just changed candle. And again, if we drill in, we'll just take a further look. And you're talking between these moves as well. You're talking between these moves. Let's just take a look. You're talking 2 pips. You're basically talking 2 pips, and being able to sort of give yourself a fine eye of seeing how things are bouncing up. There's a touch. There's the retesting up. Is it going to crash through? Let's get the crash. Want the crash through. 2 pips of movement, you know, when you can sort of drill yourself down and understand structure to that sort of level, it does sort of opens everything up that you can trust your own senses, if that makes sense. I was always scared coming out of the higher time frame stuff. I was always scared coming up the higher time frame stuff and sort of trying to understand a scalping way or a scalping method. And so leave that. Looking for that scalping method, but when you sort of, it's one thing I'll say is price action. Okay, price action is price action. It's going to respect the same on any time frame. It's a little bit quicker in moving in places. And you can see on here, I call this level out here even before it touched on here. It's come in and it's bang on. It's coming down to 15 seconds. It hasn't pushed through it, so it's respected that area that I thought it was going to. Scary stuff when you see these things happen, to be fair. Again, are we going to get the push up through here? Will we get the push up and drive up through there? Or will we get a retest to then, if it retests, are we going to get then the push down? Again, it's 2 pips. We're talking 2 pips of reading the chart here. If I'm honest with you, what I would have possibly have done is on this here, as this was coming in into this grey zone of mitigation, as this was coming in, I would have possibly of moved my SL to the break-even point. So even though that was a 1-to-1, I would have only been risking something like a 0.25%, to be fair, and I would have banked a small profit on that, because scalping is what it is. Scalping is scalping at the end of the day. So this here, for me personally, this would have been a move back to break even and sort of stop the trade out. Okay, but for this purpose and what we're looking at the moment, I just want to see what's going to happen with price in itself. Okay, I was going to pause the video, but because we're stuck between two areas, I just want to see it play, to be fair. And again, it's respecting the area. It's respecting that. And if you look at that, you're talking 10 minutes worth of price bouncing to that order block level. It can only do one of two things at this moment in time. It's either going to crash to the buy side liquidity, or it's going to come and crash. And if it crashes, it's going to start respecting these lower levels of imbalance within that swing there. Okay, bias, going back on the bias would tell you it would want to come down to these areas. Yes, we're in that consolidated phase or zone on the 1 hour, but within the 15 and 5 minutes, there was a little bit of a downtrend. Here comes a move now. That's being taken out. So there's your liquidity being taken out. It's going to run to make a new high. Now there's every chance that this is just going to run above now. This is certainly just going to run above. It's got to be fair. Are we going to get a sort of bounce, come back down to that level, which would have been of that? And then are we going to get the run to where we expect? Let's just see. Just going to pause. It's pushing. Every time I say I'm going to pause the video and come back to you, it starts to give that little push. Right, so I'll pause the video, guys. We'll be back in the next few minutes to see what's happened with the price on this. Okay. Again, I do think that now we're in the drawdown bit. We've taken out the high. For me, yes, we've entered this zone. I would have had this on a move to break even, and I would have taken out half of my profit, to be fair. But again, I'm doing this to showcase to you guys what we're looking at with regards to movements and swings and how they can come back to respect these areas. I do hope that this will continue down, to be fair, just so I can show you just how powerful this stuff is, marking out your charts as you're trading. But we'll come back in a moment to see where we are. Right, so we're back just for a little bit of an update. I'm just going to stretch this out. Nothing's changed with regards to the movement. We did take out the liquidity on this here. There is a 2-pip movement on here. A little bit of sideways motion at the moment. Overall, just bear with me, guys. I do apologize. There we are. So overall, what we're looking at is the range that we're looking at the moment. Again, just a recap. There's around our 25-pip movement of our swing point. Now we're coming down. Now we're coming down to sort of come into field of play. Let's just see if we sort of respect will come down, back down towards us. Let's shove them back off. Let's just get rid of some of the noise. See, so now, as when we came up, we broke the structure here on the higher side, okay? You can see there was liquidity residing just on there, okay? Now the liquidity has liquidity's been taken out on there, okay? Because again, if we just pan that out, now we might get the drive and the push down to the imbalanced areas. Now we'll see how strong these hold. Will we get the bounce and retests off these? Again, personally, like I say, if I went back, I would have possibly have closed this trade, or not closed. I would have possibly moved my SL to the break-even area once we ended this zone. But let's just see what the market is wanting to give us. We'll work upon the preference that the structure has held, and that we are anticipating to see if this would then, excuse me, if this would then still move down to the lower side. Now, there's the push. There's the 50% of the RR 1-to-1. Get a rejection off that, or are we going to push through it? Right, so there's the push through. There's the push through completely, okay, of the imbalance. So the imbalance has been taken on this, okay? So again, just to be visual, if you guys are going to be practicing this, it's always good to mark your charts up like this, just to practice yourself as well, okay? So the risk to reward of the R of 1-to-1 would have been taken most certainly on that. Are we going to get a rejection back up off the 50% to move down to the next one? Let's wait and see. There's the rejection. We've got 30 odd seconds, or is it going to push above it? We might get a rejection off the 50% of that. And it's just funny when you look at things like this, okay, because that was the imbalance, okay? That was the imbalance of that area, 50%. Now, if we mark this candle here, okay, now we're starting to get a bounce back up into the 50% of this candle here. 50% on anything, it doesn't matter what time frame it is, holds a lot of weight with regards to trading, okay? So again, we're balancing right on the 50% area of that. So that is 50% of that candle. And look, it's just respecting that there. Now it's going to move up through it. I would like to see a rejection off it to come down to the lower one, to be fair, but it doesn't look like it's going to do that, to be honest. So it's still within the zone of this candle here. So this high to low of this candle, it's still working within the zone of that. Is it going to break through that? And again, liquidity is not just a number of candles, okay? Liquidity is also one solitary candle. You've got to remember that. So you've got a buyer side liquidity and a selling side liquidity on this candle in itself alone. And again, when we go down on what we're working on, that in itself is only a 2-pip candle. See if we get the bounce off within the zone of this candle to reject, to come down to the next area. With a bit of luck, obviously, we might see the work within the parameter of that 2-pip candle to possibly push down to the next bit. But we'll see. We'll see. I'll pause the video. We'll be back in a second. We'll see what it's actually done. Right, so it's obviously bounced up and above the area. So again, there's nothing wrong with that. We can just sort of take a look at what we wrote out, and you can see again, we speak about imbalance. Okay, so from there down to that area, you can see here, wick to wick, selling power, it's respecting, and you just need to mark these little things. These little things will help you identify possible areas of rejection and swing points, to be fair. Is that going to allow us to come down from a swing point area, or is it just going to continue to break up through? Let's just find out. At the moment, personally, I mean, obviously I said I would have possibly moved this to break even. Technically, when we're looking at this trade as it is, this is just me showing you the preference of what I look at when I'm doing these sort of scalping things. This is still holding structure with regards to an entry and its overall analysis, which was a 1 to 3.42. I'm just deep diving inside the nuts and bolts of the actual swing point itself from an aspect of imbalance, areas of support and resistance, and how these are going to react from these points. Okay, now you can see 50%, it's more or less 50% of that candle as well, to be fair, because you've got your imbalance from the candle previous, which is very minimal, down to the wick, where the selling, there was a little bit of buying power, but then the selling come back in, and the 50% of that imbalance is more or less 50% of this candle, to be fair, overall. And again, it's stuck with it within that zone. Look, and you can't make this stuff up, guys. For 3 minutes, for 4 minutes, it's stuck within that imbalance range. Okay, so it's stuck within that imbalance range for starters, and that in itself is only worth just over a pip, and it just shows you the power of refining your stuff. Do you know what I mean? So this is what sort of gave me my light bulb moment when it came to scalping, things like that. I was a little bit of back history on me again. I was always a higher time frame guy. I hated scalping. But from me marking my own charts out on a higher time frame and sort of getting in on these areas, I didn't realize just how much my eye was being trained for this sort of stuff. Like I say, a lot of people, when you scalp, they think of moving averages, they think of trend lines, they think of break and retests, when in reality, all you really need is price action and order blocks. It's all I work from when it comes to that. And you can see how I've done this over the last, for now, we have now coming into the halfway point. So I've just shown you right now that price action, order blocks, and how they're being respected. Look, it's bouncing from one, and now it's bouncing straight down to the other one. Hopefully now we might get this push down to the 1.5 area. We'll see. Yeah, I still think it's going to be bouncing from this area here, to be fair. But it's just showing you, yeah, you don't need moving averages, you don't need RSIs, you don't need stochastics. Naked chart aspect, identifying structure, identifying your swing points, work from your buy side liquidity, your sell side liquidity. If structure holds, you're working within your order block from your high to your low, and then as you're getting your price movement within that, You are simply just identifying imbalanced areas of where price is going to go to, and then you're going to make a directional bias from when you get a reaction of those areas. And within that swing point itself, whether it's the higher highs to the higher lows and things like that, is liquidity being taken on those aspects within your bigger range? And then from there, what's happening with the imbalance in between those areas? Okay, so again, I'm hoping this is sort of giving you a little bit of a light bulb moment, but also giving you the confidence to be able to go and test this yourself. Give yourself a 2-hour time, a lot of time. Make sure it's either on a New York, London, or an Asian session, preferably at the beginning of the session when there's going to be volatility and movement. Higher time frame, block it down, what's happening with the higher time frame, the movements and things like that. And then when you drill it down to 1 minute, just be aware of what's above your swing point, what's below with supply and demand, and then wait for that break of structure within that goal-posted area. And then from there, on your bias and what you have put up, trust your bias in the way you have sort of drawn things up, and then do your order block prediction, whether it's a buy or the sell. And then from there, when it does its swings in and out of that range, mark up your imbalance areas and see how it reacts from these areas. Okay, I can't stress that enough. Okay, it's a very powerful sort of strategy. And in all honesty, again, we've been at this for about an hour. I've not stressed once. I've not sort of rushed into anything on regards to talking about anything on another trade. Let's get that back in. I need to get that fire wand. There we are. Right. And I've never rushed to get in on a trade. I've never sort of rushed to talk about anything else. It's purely just letting the price move on the 1 minute. And the stuff that I've been calling out throughout this last 45 minutes to an hour, it's just showing you it's respecting these areas. Okay, so this is the halfway point. This is where I'll go make a cup of tea, get a chocolate biscuit. I'll be back on the video in a minute. I've missed doing these, to be fair, because again, even though I'm not live trading on this at the moment, it's sharpening the eyes to what I'm seeing. Okay, so just bear with me. I'm going to go and make a half-time cup of tea. We'll be back in a moment. Wow, so we can see we've had a movement now, and it's certainly going to take us out. Let's have a look. Out of breath now. I can go upstairs to the office. Right, so we've had the rejection off the area here on that imbalance, and now it's shooting up. I don't think there's any point of return on this to come down to these areas now, to be fair. So I'll be very surprised if there is. First chocolate Vicky. Excuse me. Right, so got no shame. Let's just see if this does come up and hit us out. Well, it wouldn't have hit us out because, like I say, I worked upon the parameter earlier. Now, when we hit this here, and get rid of that bit now because it's got no relevance to what we're doing. I would have sort of, like I say, would have been out on break. On the 1-to-1, I would have been out on move to break even, close 50%. So overall, by the time you put the 1/4% and move to break even 0.5%, you probably would have made around about 1/4%, to be fair. Again, it's holding its structure from what I was pertaining. Again, this is the liquidity area. Okay, just to sort of mark things out for you guys. So what I've done on that, I was given a bit of a cushion above the liquidity, just in case it came to take out the sort of the limits or the stop the SL areas. Okay, to take the liquidity from the from the buying side or the selling side, you know, and then you may still get the push down. It just might just be a stop hunt, to be fair. And again, I allowed a little bit more than what the liquidity area was showing as a stop, okay, as a cushion, or it could possibly just have a little bit of a retracement before it's going to push completely through. I'm going to stay on this live at the minute just to see what it does, because it is pretty close to where I had that SL at the minute. But again, I'm not worrying. This is more of a practice session, if that makes sense, not live trading today, because it's FOMC. And again, we're just sort of practicing and showing you what I do from an aspect of a 1 minute scalp, and how I set the goalposts, as I say. The two pink lines is what we're working between in a trading session. Already grabbed, or I would have already grabbed a little bit of profit this morning on the attention of, that's going to hit the stop there now, but not quite. On the attention of the 1-to-1, bring it there to move to break even. Still hasn't stopped though, guys. It's going to. It's just a matter of time when. It's not if, it's when. This is not going to return back down to the downside. This is going to push through. There you go. Let's push through. So now we would have had, let's just take a look. We would have had that there would have been our to break even. Okay, so we would have had that. There would have been an entry from there. Let's just clear up a bit. Just get rid of that there. That was up here. Okay. Just going to clear up the lines a bit, and then we're going to look into our next trade. Okay, again, there's no rush. So now we've had a break of structure. Let's just clear what we're looking at. Now we've predetermined where this is moving as well. Right, so now we've had a break of structure. From that aspect, okay? There has been a break of structure there. That would have been a trade winning there. It was more or less a 1-to-1, wasn't it? To be fair. So that would have been a 1. So what I'm going to do, I'm going to put that there. I think by the time it worked out, possibly by the 0.25%, because we would have moved to break even. We'll have that there. So now I'm looking at the order block. Get rid of that. So we've got two areas of interest, okay? So the push came out of here, okay? Then a retest there. So we've got an order block here. You've got that there, in fairness. So being on the safer side of caution, I would work that from around about there. And that there, okay, so waiting for a return to come back in. I'm just waiting for this to turn. And the higher that this goes, okay, let's just get rid of that. And the higher that this goes, in all fairness, okay, we just need to continue pushing this up here as well. There's the push back in. Just over a 1-to-2. Again, we speak about imbalance and things like that, okay? speak about imbalance. So just watch how these areas hold. So that they're imbalanced. Okay. From a structure player, wick to there. And again, the swing high, the swing point from before, more or less 50% of this retraced area. Imbalance. There we go. Let's just see these areas here get tested or respected in any way, shape, or form. Just while I have another chocolate biscuit. Right. So another way to look at this as well, okay, is when it comes to retracements and things, when you're drawing out fibs and you're waiting for price to come back into areas like the money zone, 7-1 area, 786, 886, the deeper your price is going to come into what you're looking at and your zone, okay, you're getting a premium price and a discount price. That's how you would see both sides of the fence, okay? And the setup that we've got here at the moment is no different to when you're using a fib area, okay? There's a possibility of 1, 2, 3, 4 rejection points, okay? And as each one hits those points, you've got a premium price, you've got a discount price, you've got a bargain basement price, and then you've got the Christmas sales price, okay? So basically, we are anticipating a move deep down into the bargain basement area from this. Yes, you might get a rejection from here, and then it might spike up, taking liquidity up on this high side. At the moment, you've got a buying side liquidity at the moment. You've got liquidity residing there, okay? So that's a target area at the moment. If we get the push down, okay, there's a few things could happen. We could get push, rejection, take, okay? You could get push, rejection, take, okay? The one that we are anticipating is all the way down to here, not so much onto there. We've got a bit of a cushion before the order block, okay? So we would possibly be wanting that push down and then the move up to the buy side. So there's the 3 options we'll look at the moment. You can see price at this given time. Just make this a little bit thicker. And let's give it a different color. Let's give it a different color. Oh. Right. So again, price has come down and it's hovered. It's hovered on the area. It's coming in. It's touching or mitigating into the area of the first part of the imbalance. Is it going to get the touch off it? So it's taking its time. It's mitigating into the imbalanced area, and we've just had a touch into the area. Okay, and again, can't make this stuff up, guys. That mitigated area or that mitigation area is not even worth a pip. It's not even worth a pip. Look how it's come in. It's respected. and now it's on its next move. Is it going to take the buy side liquidity? Is it going to take out that buy side liquidity, or is it going to come back down and just form like a double tap to then come to the next area of a bargain buy sort of thing? Time will tell. So you could technically have getting in there and getting a good trade, you know. So let's just take a little look. Let's just say you wanted to get in on the imbalanced sort of structured area. Okay. This is a more advanced technique of trading, to be fair. Okay. So that there could have given you, based upon a structure of play, an imbalance, you possibly could have gotten a 1 to 5 or 1 to 6 on that, to be fair, if you cushioned yourself a bit more. But again, you're talking about super refinement on that, to be honest. Okay. I've done it in the past. And sometimes instead of, when I go to sort of do my risk, when I do my risk to reward, if I've got multiple areas where there's chances where we could get an entry on an imbalance to go to the buy side liquidity, or if it's to the sell side liquidity, I would break what normal lot size I would use up. So the pot on a bigger scale, I would then say, well, I've got 4 areas, divide me normal lot size that I would sort of risk, and use that lot size on multiple different entry points, if that makes sense. So yeah, what we've had there, again, we've not entered, to be fair. So, excuse me, let's just reanalyze what we're looking at the moment. So now I'm looking at that as an order block on here. Certainly a re-entry. Certainly a re-entry. That liquidity's been taken. Mitigation. Let's have a look, see where we are. Not mitigation. I haven't got it set up. I haven't got it set on there. So just get rid of that. So at the moment, buy and side liquidity is residing on the higher side. Right there. And again, as price keeps moving up until we start getting a structured move back in. Let's get rid of that one. That's now come out of play. Get rid of that. Get rid of that. And each time we'll get that break of structure, we're just moving the bias, to be fair. So now we've got a total shift in where we are. Let's get this just to make it clear. And again, we set a trend line this morning. The trend line was there. Okay. So now we're moving up towards that. We go on to the 1 hour. On the 1 hour, we are also looking at, and it's always good to sort of pan out and look at these bigger areas. We've got maneuver for that area, to be fair. And again, let's just mark out for 50% of a zone. And look at that. When you look at the hour, guys, it's been nothing but buying power, buying power, buying power. Come back out, go back down to 1 minute. Let's just move the liquidity a little bit higher. I'll wait until we start getting a bit of a pullback before we sort of pause the video for the next bit. So we're anticipating now swoop down to enter on this order block here. 3 pip stop. It's nearly a 1 to 4 at the moment. As long as this keeps climbing, this order block will hold its structure. There's a bit of a turn a bit. It's going to keep climbing. 30 seconds our candle, so surely we're going to get a push back down. Talking a 10 pip move there. 10 pip move over the span of around about 4 or 5 minutes. It's done it again. Liquidity. Push higher. We're anticipating that there. Let's just mark out that order block. That's the order block there. We want to cushion a bit on either side, if I'm honest with you. Let's get the cushion. Let's make it a 4 pip cushion, okay? I'll go with trade. There's a 1 to 3. I see a couple of candle rejections coming back down, to be fair. Always eating 12. All right, so we might start getting the rejections down now. We don't want to continue up. We want to push down. Right. So, with regards to imbalance on this impulse move up, there's very little imbalance. Not even a pip's worth there. But again, we mark it up and then just say we get a rejection of that to possibly move higher up, or will we push through to come again? We've got an area here, and that's more or less the entry, the 50% on there. You see what I mean? That's imbalance in itself there. So we're looking at the 50% inside of that imbalance as an entry point. So again, I'll just go on about how this initially drived and pushed up to the higher side, to be fair. I just want to look at something else as well. This is just something I'm looking at the minute with Bitcoin, to be fair. It's coming down to the parameters at the minute. Something I'm looking at, which I'm going to be bringing into the group. I'll pause the video and I'll be back in the next few minutes, guys. Hi guys, we're back again. And again, look at what we have been talking about throughout the whole of this session today. Just look at how that was rejected. And now it's pushing through it. You see, it's that there, like I say, the imbalance area. You're literally talking just under a pip. It's come in, respected, and now it's heading down towards the lower side to this order block. So again, we can get rid of that. And this is just me. This is me being my sort of stuff. I'm a very visual person when it comes to trading. Okay, I like to mark up anything and everything, because then I get to see how areas are respected and things like that. And again, the zone respected. Again, as we move down, just ignore the ping, and it's just my MetaTrader going off on other things as well. So what you've got in here as well at the moment, we've got around 25 seconds of this current candle to play, and then this will possibly create an imbalanced area. And will the open of the next candle be a selling power to then come down onto this here, or will it be a continuation to the upside? We'll just have to wait and see. And again, just marking these things out it's massive in your learning journey, if that makes sense. Let's just take a look again. Wick to wick, there's an imbalance area. Sausage. There's an imbalance area there. Let's just mark it out. Let's just mark it out. See how quick it takes for price to want to come back to mitigate into that imbalance area. And I mean, I love to work upon imbalance and things like that, because again, it'll come to mitigate into those areas quite quickly, to be fair, on a scalper nature, if that makes sense. We know there's going to be a level or an area of a possible rejection or a complete push and breakthrough. We'll just see what happens on this one. Let's come in to get on the, there's the push there. It's residing on the halfway point. We are currently on a new candle. Look at that. Again, guys, I can't make this stuff up. Look where it's rejecting from. Simple stuff. Again, we're looking at, from a 3 candle thing there, we've got liquidity on this candle itself. You've got liquidity there itself. I just want to take a look at some of it. Right, yeah, there's something I'm doing with Bitcoin at the moment, guys, as well. More of that to come in the group as time goes on. Let's see, we're going to take the liquidity side. We are still anticipating a move down into just above the order block. Again, the order block is right on here, but I've got a cushion just above. I just want to get rid of that, just so it's going to get rid of the noise. But that is the order block. Okay. Overall, I've got a cushion. It's a 4 pip stop loss, and we're looking at roughly a 1 to 3 sort of maneuver. Again, the liquidity at the moment is residing underneath this solitary candle. You can see it's coming down to double tap into that. Now it's pushed through. It's taking out that liquidity. And we just keep doing. All you need to do is just keep pushing and pushing. Mark it up, visualize it, see where it's heading. Okay. Again, we are now heading into an imbalanced area. Okay. We've got from that wick up to that wick. Okay. So the imbalance area, we talk about mitigation and things like that. There's 1 or 2 areas left on this sort of buy-in aspect, or possible buy, as we go deeper down into what we call the discount areas. It's either going to be the imbalance that triggers, or it's going to be the order block that triggers. So I've cushioned it just above the order block. See, we get the push down into the area of just above the order block area. It's starting to move down. I see we get the continuation of price coming down. But this part here is played beautifully. Yeah, what I was going to expect it to do. Again, it's this setting itself away. If I just mark this here, this is a possible level it's going to bounce upon. Just need to make that purple. Plus we get a bounce from that area as well, to be fair. Get rid of this. Is it going to reject from the purple, or will it come into my area there, or will it even go down to the order block? Ultimately, that's on the bias. That's where we would sort of expect if the range of the swing, the low, okay. So what we're looking at, that's the low of the range. This is This is the high of the range. Okay, so that's the range we're working in between at the moment. Now we've crashed through the area. We're now in an entry. Okay, so I do apologize about that. That's just me Bitcoin going off. So we now are in an entry. Now, will the entry come down to the ultimate bargain, but the bargain sort of buy area? Will it touch into and mitigate into the area of the order block, or is it going to bounce off the cushioned area that I was anticipating? Okay, and again, this is a 1 to 3. This might be the final trade of the session, to be fair. Now, if you remember, I said at the beginning of the session, setting yourself your goalposts, you would technically be on a good day getting at least 1, if a good day, 2 trades. I've been showing you a process of what we've been going through, and we've actually getting 2 trades today. The one previous, we would have, and I did call it, I would have moved my SL to a break-even area. It came back and it took us out on that, but it would have been around about a 1 to 1, risking a quarter of a percent. We would have gotten that quarter and bagged at least a few pips. We would have bagged a few pips at least. Again, we're now coming through. Is this going to touch into, put that back, or is this going to touch into that order block? There's the touch into the order block. Look at that, can't make it up, touched, wicked entry. Now, will it push up, or will it come and take us out? Will it come and take us out? And again, risking a quarter of a percent. Get that back. Risking a quarter of a percent. If this is to come and stop us out, it just means you break even for the day, to be fair. In all honesty. Let's just see, we'll get that rejection to come back up. Imbalance wise, we can now get rid of that because we know we played beautifully into that. Imbalance on its way down. Is there any targets on the higher side? Not really at all. So dear me, get this down there. So there's an imbalanced area there. Imbalanced area there. Let's just see what's happened here. Profits going up on that as well. So we've got two imbalanced areas up on the top. I'm just going to mark the 50% of that up, to be fair. There's no other imbalanced targets areas for the return up, to be honest with you. I'm going to pause the video. We'll be back in a moment. I'm just going to get rid of the swing. So these are the two areas. I'm going to drill that out over to here because this will certainly be the last trade of the session today. And we'll see how this plays out. I'll be back in a moment, guys. Be back in a moment. All right, so I just thought I'll quickly join. You can see how we're holding structure at the moment. We're holding structure at the moment, and we're right in between everything, hovering on that entry area at the moment. So again, anticipating the move to possibly imbalance here, which again is going to be around just under a 1 to 1, or we're going to get a 1.68. This would only be risking, like I say, risking that 0.25%, quarter of a percent, which again we would have bagged earlier on this morning. Going on the parameters that I'd said, this is not live trading. Well, it is live trading, but I have not executed any live trades as such. I've just spoke you through the process of what I'm doing, what I look at, what I visualize, what I mark up, and hopefully it's just going to give you some motivation to possibly do the same sort of aspect. Okay, so again, I'm going to pause the video. We'll be back in a moment. Right, so as we go, let's just take a look what's happening on this side of the fence. All right, we're still going on there. Right, got my eyes on two screens. I do apologize. Right, so we're in the drawdown on here at the moment. Again, all's not lost, because this is just me getting back into the flow of things, showing you how I sort of scalp the 1 minute charts, how I mark things up. And we're going to have at the end of this session a final thought process, okay? And I'm going to chat more about that. So one or two things is going to happen. This is either got that stopped us out, yeah. So that has stopped it out, okay? So that would have meant that this session is a break-even session, so to speak, because we would have only risked 0.25%, okay? So I'm not too worried about that. Again, let's just stop the share and then we'll have a chat and come to a conclusion at the end. We had a good session today. I've enjoyed it, to be fair. It's sort of sharpening my eyes and getting me back into it. Again, my personal preference, I'm just going to stop the share and then we're going to have a further chat. Okay, so the background that I've got with trading, traded for 5 years. Okay, traded for 5 years, and I was in a full-time job, and I was always a higher time frame aspect. Worked with harmonics, and was consistent with harmonics, and that sort of stuff will come in the group real soon. From there, while I was at work, I used to call trades for the old group I was with, and it was very profitable for guys, and it was that consistent for me personally. I ended up with a couple of years be able to get myself more or less sort of debt free and be able to become trading from home. Okay, and that's what brought this group about. From there, I've never really sort of reopened the trade callouts that I do up until now. That's going to be starting off from the 10th of January. So if you're not already in there, or if you're watching this on YouTube and you're not in the Discord, you just need to ask, get inside, and I'll get you involved with the trade ideas that we do. And I'm looking forward to doing that. Okay. Now, from what I did outside of when I was at work and working the higher time frame stuff, I started falling in love with like smart money and price action. And I used to be an indicator guy, like most of these platforms. You've got to use this software, you've got to use that software. And once I started to understand the movement of price and price action itself, I soon come to realize you don't need to put your trust into these indicators, because they're just a lagging thing. Now, I hope if you've watched this video all the way through, okay, you'll see I never once used an indicator today. Okay, I simply just set a couple of goal posts and said I'm going to trade between A and B, and I used a price action. Now you'll notice I used imbalance a lot and things like that. So when you are starting to create a new range, a new swing point, when you do that, you only need to really look at where is the imbalance between those areas, and you can see, and you can certainly see that it played into these areas and rejections, or it did a bounce retest, and that worked really well. Again, I mean, I just hope it gives you guys the confidence to give this a little go yourself. You don't need a live trade. This group is not about getting straight into live trading. Okay, I work upon the preference of putting this Discord channel together to work upon a couple of things. Okay, the three things was to build your confidence, build your consistency, and then we work upon the profitability. Okay, a lot of these places you go into as a paid membership, or a high ticket membership, or a high ticket one-off fee, and you feel rushed to be able to sort of replicate what the others are doing, or sort of produce results to justify why you're paying into the system. This is not what this is about. This is getting a group of like-minded people together, showing you a process what others that are a little bit further forward than what you are from when you first start, and go through the process of sort of emulating and carbon copying what these guys are doing, like myself and the others that are in the group, the mods and things like that, and the other traders. Because after all, if you are put in a stress-free or a stressless environment, and you are just able to just roam the field and be able to follow the footprints that are being left behind and sort of follow the process and sort of understand what's going on, you are not sort of pressured into thinking you have to live trade to be able to retain a level of monetary value to be able to stay within a system. That's not what this system's about. This is to have and hold honesty and value and integrity. Honesty and value and integrity is above and beyond in here. But also, again, we have the beginners, the intermediate and advanced areas. Again, if you're new to coming into what we're doing in here, I just implore you to go through the different videos from the very start, watch through them, and then we have a chat segment in each of those areas, on the beginner, on the intermediate, and then onto the advanced area. And hopefully it's going to take you through those 3 blocks of foundations, which is building your confidence to be able to set things up, building your consistency because you are following a certain structured plan, whether that is going to be through the harmonics, whether that's going to be through the smart money, or whether that is going to be, like I said, the fire scalper I've done there today. I've sort of debunked a myth that on the scalping side, a lot of people get in the think, right, I need to get in on an entry. But a lot of these places where I've been and been part of, people are sitting at the chart, setting an entry based upon a moving average, based upon an oscillator, based upon the RSI, based upon divergence, and there is no clarity or real structure to why they have entered, to why they're getting out, or to why they are getting out on a TP, or why they are getting out if a trade goes against them. Okay, I've set goalposts. Okay, 2-hour trading, that's all you need. 2 hours of trading. Within those 2 hours, I said at the beginning of that video, and again, you can watch it back if you want, I said at the beginning of that video, you will only get 1, maybe 2 on a good day. At a push on an extremely good day, you would possibly get 3 trades based upon that 2-hour structure. That is cutting out greed. That is cutting out the pressure to look for trades, and you are working upon proper price action and structure points. Okay. Again, we weren't live trading. We were live trading on the aspect of, I was showing you visually where I would have gotten in and getting out. Again, we would have done a partial structure win on the first trade, but then we possibly would have lost that on the second trade. And for me personally, that would not have gotten me down, knowing that I'd won one and then lost one. It just means I have had a nice lesson today and understand structure as a whole. And the more you implement these different things, the more you're going to learn. Okay, guys. So again, if you're watching this on YouTube and you're not inside of here and you want to know more about it and you want to see more of those sort of things, just comment on the YouTube channel below here. Okay, I'll get you inside of what we have on the Discord area. Again, if you are enjoying anything that you are seeing, there's a couple of ways you can help support what I do. It's if you're inside of the channel itself, there is an area where you can support by dropping a little donation and support the channel and giving a little bit towards a cup of coffee, or there'll be a link below in the description of this YouTube video. Okay, and you can just quickly go to a donation side on there. It just genuinely helps me with regards to advancing on keeping everything up to date, the content and everything. Okay, if you are getting any sort of value, just whatever you can give it, it's all helpful. And if you want to get inside there, a couple of ways you can do it. Drop it in the comments below. Go to the forexfiremembers.com, drop it in the chat, and I look forward to having a one-on-one with you and getting you on the inside. Okay, guys. So that's been today's little video session for the Discord group. If you can, please give a thumbs up. Let me know. In this will be going into the advanced sort of trading area, and in the advanced module area there'll be an advanced chat. If you just want to have a chat about how or what I've done today on there, you're more than welcome. Okay. Again, we did one. It was just yesterday, I think it was. I forget what that one was about. But anyway, I'll be doing more videos on this, whether it's going to be on harmonics, whether it's going to be the scalper. That was, it was a 3-box method we done yesterday, and that got a good reception. It got really, really good reception, that. And I hope you all enjoyed yesterday's session. There was a couple of guys put in just to sort of finalize this on the final thought. There was a couple of guys who was doing the 3-box method, and some of their trades were going like 1 to 10, 1 to 12s. So it does really work. So if you want to get in on that, it's a place to be, guys. Okay, so I'm going to sign off for now. Hope you all have a fantastic day. Don't forget, if you're in the Discord and you need any help, just give me a shout out or ask for one of the mods. If we don't have the answer, there's certainly enough people in there now. We're growing rapidly now. We've got around about 430 plus members now, and we're heading towards the halfway point of getting through up into the 500. Again, my aim for going into this year, before the end of the year, I want to have well over 1,000. Again, it's a stressless and stress-free zone to come in and trade together in the one and only true community. Okay, guys, so I'll see you on the next one. Catch you later.